Hey, what's good, everyone? Welcome to the next block, episode 93. We moving on up closer to 100, and hopefully we have Silvio on soon enough. How you doing, Crypto for Change?
I'm doing good, doing good. And just so everybody is aware, we do have an angle. We have a way in with talking with Silvio right now. So we are trying to get that interview lined up. There's a good chance it might not be live. I don't know. We might have to do a pre-record with that one and then just drop it. But nonetheless, it will be a fire episode, hopefully on episode 100, which would be sometime near the end of March. But other than that, doing good, doing good. Excited for, about to January felt like a long month. I'm just going to say it right there. It felt like
Agreed.
literally the longest month ever. And so February, it'll be interesting to see what happens for the crypto markets. Obviously, Algorand, sitting at support right now, I would say around that 15, 16 cents area. And
Yep.
I think it can bounce. And I think 30 cents, obviously, when it does bounce, is going to be hopefully the next target we see. So that would be nice to see some excitement in the markets. And I think we could get that in February, but it's also, there's a part of me that's like something's going to happen. Like we're about to get
Mhm.
a black swan event maybe or something coming in February. So don't get too excited. What are your
Well,
thoughts?
I mean, we got the Bitcoin approval. They trying to maybe do an Ethereum ETF, so that could help. But I agree, y'all don't get too excited. Anything could happen. This is definitely crypto. But let's look at a little bit of these wider range market cap prices, and then we'll get closer to bringing our special guest onto the show. So let
Yeah.
me screen this right here,
Yeah,
and
and I will
we'll
say, if you've
check
been
out.
following the channel, one of the cryptos that we've actually mentioned, or at least I've actually mentioned quite a
Mhm.
lot the past, 2 months, 3 months, is Render. And if I think if you go to the last 24 hours, I want to say
That's
Render,
24 hours.
is one, yeah,
Yeah,
right there,
right
right
here.
next to Chainlink. Like, and this
Mhm.
Render is a huge AI, like it's got the whole narrative of AI, cloud computing, all the stuff with that you would think right now would be hot, especially with the fact that Nvidia and all the other GPU and AI type stocks are running as well. Render's been doing
Yep.
good. I'm excited for it. I think it's going to double in February. I would not be surprised to see Render above $8 at some point in
Like, let's
February.
go.
So yeah, I think that's easily that could happen. And I think Chainlink right there, it's another one. Obviously, it's up at the top in the last 24 hours. I could see it easily back above $20 and starting to make its
Mhm.
moves higher. Obviously, a lot of the other ones right there below it, I don't hold any of those, and there's so many cryptos out there. But there is definitely some froth in the market. I think Solana obviously still doing good, and that's another thing with Render is it's moving to Solana. So I don't know if you guys noticed, but I think a couple days ago, Coinbase just announced that they're going to be listing Render. They already have the RNDR token, which is the Ethereum version of Render, but they're now going to be listing the Render, which is the Solana, because Render is moving from Ethereum to Solana. So I think it's also
Yep.
going to catch a lot of that hype, and I think you're going to see a lot of the liquidity that's just in there. I mean, that JUP airdrop just made a ton of people a heck of a lot of money. So I think a lot
Yep.
of that money, because exchange tokens, they do really well and they can run really hot. But at the end of the day, if you look at Cake Swap and a lot of the other ones, like they crash hard. So I think a lot of that liquidity is going to leave it, and I think it's going to go into other projects. And I think Render is going to be a big one there. So that's out of the top 100 outside of Algorand. Obviously, I hope Algorand does good. That's my one that I'm most bullish on.
Yeah, I would agree with you. Thanks to you, I'm more bullish on Render. I still a big fan of the Cosmos ecosystem, but
Yeah.
losing my faith a little bit with Cosmos as of recently. But I do still like Osmosis, Injective, Celestia here. They're still doing well, so I'm into those. Not, not no financial advice. Y'all do what y'all want to do. And definitely let us know if y'all see any coins or currency, cryptocurrencies that we should be researching and looking into.
Yeah.
Let's
Drop us
move
your
on
favorite in the
to
comments.
one more thing before we bring the crew on here. Uh, Fisherman over here dropped a great article about
Mm.
Algorand. So if y'all haven't seen this article, I would definitely encourage y'all to check it out. I love the imaging as well. So big shout out to him. It's a quick read, but it's all about kind of how to improve the Algorand blockchain and some ideas on tokenomics and, opt-ins, opt-out, all kind of things. So I would definitely recommend y'all check that out. You got any
Yeah.
comment on it?
I read through it, and I do think it's interesting. I feel like I just feel like Algorand's at an interesting spot because we know that change needs to happen to grow and to get where we need to be. And obviously, last week we had Stacy, the CEO of the Algorand Foundation, on to talk about the 2024 roadmap. I mean, we've heard John Woods talk about the 2024 roadmap and a lot of the changes that are coming. And I feel like I think a lot of people in the Algorand ecosystem are like they want the change now. Like they want to be more radical with the change. And I think you could see that in Fisherman's post or in his blog.
Yep.
Is saying like, hey, scrap everything.
Long one.
Like let's just like cut the arm off, like, just cut it off and let's just start fresh or, try to. And I think some people are just frustrated. They don't want to wait till Q2, till Q3 or Q4 for some of these things to go and implement. They want to see the change happen now because, they look around. I mean, heck, I'm looking around. I see the excitement that's happening on Base and Optimism and the whole super chain idea. I see the excitement on Solana, even though it, hit some max earlier today or earlier this week. And there's some things going on that might, be some red flags there. I think there's just a lot of hype that's out there, and Algorand, obviously, if you're looking at token price or just even ecosystem wise, it's not capturing a lot of that. And I think some people want to spice it up a little bit. But yeah, I definitely think, give that a read. If you're dedicated to Algorand, you like it. There's some interesting ideas pitched in there to make Algorand be more like an Ethereum style, proof of stake chain, which could attract liquidity. It could attract new users, especially with having a more sustainable business. But I don't know. I think some of the stuff in there might be a little too radical at this moment, especially because we still have no idea what the changes for Algorand with the whole, Gambit and all the stuff that's planned, incentivizing nodes and everything and relays getting, turning to peer-to-peer gossip. We still have no idea how those things are going to work out and what change that could, or what that could facilitate. So it'll be interesting to see, but I think we got to, 2024 is going to be an interesting year for Algorand. And even like I asked Stacy, I think it's a do or die year. Like, honestly, I think if Algorand doesn't capitalize this year on these changes and attract liquidity and really flex what it can do, not saying Algorand's going to die. Like, I think big businesses could still choose Algorand and maybe some of the things, that Algorand's fit for, it will. But I think the whole NFTs, DeFi, it might just get sucked out and go somewhere else to other chains. I don't know. That's my thought.
Yeah, we will see. But let's move forward.
Maybe we can even get the team from Vestige to comment on their thoughts as well. But let's bring them on.
So, we're gonna bring the team from Vestige on. Mariano and Greg, welcome to the show.
Hey guys,
how's it going?
Hey.
Hello.
Always great to hear that DeFi and Algorand might die.
What a great topic to start a conversation with us.
Right? Hey, that's why we bring you guys on, because from a user standpoint and from our standpoint, it is unique versus you guys are building. I mean, we've had Folks Finance on before. We've had past, iterations of DeFi projects. We obviously are partnered with Messina and we see what they're building in the space. And, there is excitement, but, to me, it's like, when you look at the macro scale of where crypto's at, it does seem like Algorand is kind of just, catching the tails, right? And I want to see it do way more. Just like, Greg, you created the juicing thing for Algorand and really flexed the strength of what Algorand could do in January, literally putting Algorand on top of real TPS transactions per second, and wasn't messaging. It was all, actual real transactions. And so we know what Algorand can do and what it can do even in DeFi. I mean, and even, Solana, a lot of people are touting it flipping Ethereum index volume for, a 7-day period, or even in NFTs. Like, that stuff is happening. I think Algorand could be and should be the next one to step up. But let's dive into some of that. Tell us a little bit about what, who you guys are, and and why you decided to create Vestige, and why you decided to create Vestige on Algorand, and why you're excited about it.
I don't know, Greg, you want to tackle that?
Why we're excited about Algorand in general, or DeFi on it? Because I guess these are two different questions.
Go with the, one, why are you excited? Let's since we had the conversation kind of there, why are you excited about DeFi on Algorand? Let's go there first.
Okay. So the question is kind of self-explanatory. If you actually have tried swapping on even on Solana, that currently is hoarding all of that volume, all of that liquidity. Even yesterday when the UP coin, this recent airdrop was happening, this basically exploded Solana to the point where any swaps were impossible to make. You couldn't make anything. If you were just trying to use the dexes that were available to normal people, this was just not possible. Even if you set slippage to like 20%, it would just not go through because there was so much volatility. And on Algorand, these problems don't exist, and they wouldn't exist even if we had such a high amount of volume. And the problem here is essentially trying to show that we wouldn't have those problems, but we can't because we don't have that much volume. So the thing that you mentioned with oranges and juicing, that was my kind of approach to this, where I was trying to make something that tries to utilize the chain to its fullest potential, to make it to use basically as much of it as possible. And it succeeded quite well, to the point where indexers couldn't handle it, but not the network. The network was doing completely great.
Now, it'd be kind of interesting to ask you this question if you know this about Solana, because obviously if the dexes and the wallets are kind of having that issue of swapping whatnot, because Algorand kind of experienced that the chain continued on without a hiccup, when the juicing and stuff and the transactions ran sky high. But obviously if you were using Para or maybe trying to swap on Vestige or something, it seemed like there was a lot of issues people were experiencing. Is that similar to what maybe Solana experienced as well, or was it a chain issue there?
It's not quite similar to what Solana experienced, because when Solana has had high throughput problems, it has been the underlying chain that has halted. Whereas when we had the problems that we experienced, it was essentially two main things. One of them was that we had hard-coded, most dApps out there hard code a fee structure that doesn't really fit when there's high demand. So Algorand has a fee scaling mechanism where if you are in a situation of high demand, you need to pay more for X or Y transactions, just as a way to like counteract DDoS attacks and whatnot. Most people don't do that because we have never had a high throughput situation on mainnet. So when the Aura launch happened and we suddenly were on that situation, what happened is that a lot of these dApps on their front end or on their wallet interface or on their whatnot, they had hard coded this, and they never allowed it to be a variable. So because they had never allowed it to be a variable, it was just failing because the fees that they were paying weren't enough to be appended to the current block. And then the second one was that a lot of infrastructure providers, they run their infrastructure assuming that we're going to have a volume of, I don't know, 10,000. And when Aura launched, we had a volume of like 1 million, like 100x what usually the chain experience, or 1,000x what the chain usually experience. So in that influx, because a lot of these businesses are either running at a loss or cutting costs wherever they can, they tend to use either public goods like Orthos nodes, or alternatively, they tend to run nodes that aren't necessarily the most performance heavy to cut a bit on the bill. And that caused essentially like most of the problems. But the chain itself, what it means, like the posting of transactions within the parameters of the chain, that never stopped. And that worked flawlessly. So if you had like infrastructure critical, like something critical where you actually do all of these operations because you want it to run 24/7, you wouldn't have seen a bleep, which is awesome, honestly.
Yeah. And I think Algorand's time is coming where it'll get to flex, its strength, just like Solana is getting to flex its better things, or its good things outside of Ethereum right now. I think the time is coming as well. And you guys are going to be starting the juicing again, come like the early part of February. Is that correct?
I mean, we are preparing for it, but it won't come back in the same format that we did in January. So I learned from my mistake that just letting people spam the chain causes problems to people who try to run it. So the different approach is that there will be a single kind of a spammer central application that will adjust itself to spam in the most efficient way, right? Because in January people were spamming just as like 0.001 transaction fees, and that means that there's like a million of them that are coming like hour after hour after hour. So the staking contract actually will do that, so it posts as little transactions as possible while still getting those rewards.
Yeah. And I saw a question on the feed of, can you juice your Vestige swaps and give some oranges back to users? You can. The smart contract has a cap on how much you can spend on a juicing transaction. And this cap is so that you don't get snipes, so that the actual effort is put in there and you don't actually get someone, either a node operator or something like that, coming and appending, like, I don't know, they suddenly spend market price and they become the first juicers. So there is a cap to how much you can do in a single transaction. Because of that cap, if your group of transactions runs past that cap, you can't use it as a juicing transaction. But if it doesn't, then you can. So essentially, anything like a swap, a transfer, a regular NFT buy, you could create infrastructure to wrap that around and send, and also call the juicing app, and that gas will go into effort. So you could passively mine oranges if you want. So if Para is listening to the talk and they want to upgrade their wallet to give their users an ASA back, then they should totally build this.
Yeah, it sounds exciting.
With the juicing, can you do the breakdown? Because I'm not fully understanding like the origin story. I know it has some connection with John Woods or something of that nature. Can you break that down?
Yeah, sure. I mean, the idea for Aura was in my brain like around the time where the whole oranges thing was happening with John. So it was a very convenient name to just name it that. But the idea, essentially, what it was to make a coin that is mined by sending transactions, and that is a natural dynamic where the more transactions you send, the more the higher of your power of mining is, and the more likely you're going to get the reward. It's very similar to Bitcoin in this way, where you replace the hashing power of the graphics cards with the transactions fees, essentially. So I just kind of used that orange name when this was happening to combine these both ideas, and it was very good success. I feel like a lot of people were interested in what was happening. It was very different to what exists so far. And Aura is very interesting in this way because, as Mariano mentioned, you can get a refund on your transaction fees by mining Aura. And since this will always happen, like you can always spend those transaction fees in mining, and then eventually you get paid back. You can build products in this way, where, for example, you never spend anything on transactions because you get Aura back, or you can incentivize other people to spend transaction fees for you, and then you give them Aura. It's a very integral part of the ecosystem. I think it has a great potential to be actually used for stuff.
So Aura is Algorand's Bitcoin, essentially.
Kinda, yeah.
And it's orange.
Yeah. And it's just a good display of the general Algorand architecture and everything that it allows to do, because it's hyper efficient just in general. Writing smart contracts on Algorand, whereas it used to be way harder because you didn't have so much dev tooling before. What they've done in this past year has made it so that developers like Greg, who a year ago, no, less like 3 months ago, had never written a smart contract, but they're very, very proficient on languages like, for example, TypeScript. They went from, in the matter of weeks, they were already writing. He was already writing smart contracts, and in the matter of months, he was already doing novel products that hadn't been done before, like his Build a Bold challenge and Aura. So that just shows how much the tooling has progressed. This before, when I started on Algorand, this wasn't possible at all. Like, you did have to sit down, learn the TO, learn a bunch of things, which to programmers who like to do and see what they've done in like the wild, this is a very limiting factor. So when you can jump right into it, write something, try it, break it, iterate, that just creates a feedback loop that's way easier to learn. And Greg can talk all about that.
Yeah.
Exactly. I'm the type of developer that just, builds something, sees if it works, and then iterates on that forever. And with previous tools, that was just not possible. You had to have, an entire paper of how exactly this is supposed to be working. And when you have everything figured out, then you finally get to actually writing the smart contract. And that's just not how I work, right? So with the new tools, I can just build something, I can test if it works, and I can change it at any given point. And finally, when I'm happy with how it looks like and how it works, then I can deploy it and let other people use it. So the OR contract was actually written in like 2 or 3 days, and it's set to run for 15 years. So
Yeah.
that's
So
the kind of scale we're talking about.
yeah, a quick
Amazing.
question then is, what are your all's thoughts, obviously being developers on Algorand with the new algo kit and everything that's been done, how does Algorand's developer experience right now, I feel like, compare to maybe some of the others, Ethereum, Solana, and stuff like that? What are your all's thoughts, on that?
So
much
I
better.
like to, yeah, for starters, better. I like to think of every chain kind of as its own either operating software or like tech stack. Think of it like a database, or like whether you're programming for an Apple kit or for a mobile device. Like that kind of what happens when you start looking at different chains out there. What Algorand does really well is that you don't have to think a lot about the intricacies that blockchains have, because it just, like, as a design concept, it does so many things well at the base level that when you build complexity around it, like when you build smart contracts around it, the places where it can go wrong are way more limited in scope. And the things that you have to think about, like, for example, whether or not my transaction went through, like how many rounds I have to wait to know if a user paid me. Yeah, I don't have to wait any rounds, because I know that if the round is final, the round is final. Like, it happened, it's already appended, it's over. What happens when a transaction fails? I don't have to worry about that, because if a transaction fails, it just doesn't get appended. Like, no gas spent, no funny business, nothing happened. Another one, like grouping transactions. When I'm working with multiple smart contracts, like we do with our aggregator, for example, how do I know if the user is not going to get stuck in spot C of an ABCD swap? Like the user is going to hate me if he wants to buy Bitcoin using Algorand and I end up giving him USDC. He's going to be like, bro, like you failed at your job. With Algorand, because I can atomically group all of them and be like, either you do all of them or you do none. I don't have to care about that. And all of those things, at like the end goal, like at the end, make it so that the user just doesn't think about all the complicated stuff. I've been having like the bad habit of, whenever I pay on a contactless card, I look at the terminal and I start counting the seconds, and then I start thinking whether or not this could run an Algorand. And most of the time it could. And like, that's crazy. Like, that's legit crazy. When I'm looking at like a transaction that's being done on a distributed network, and it's comparable in speed and comparable in precision to the same transaction that's being done on like this multi-billion business that's running its own infrastructure and its own hardware, and they're both feel the same, then I know like there's a good product here.
Yeah,
it's like Visa. Like, the dream thing would be, this is what I always wanted, is to have a debit card that connects to like my Algorand account, and we can just spend euros, spend USDC at the store, and it would be so simple and easy. And then I'll feel really secure as well. Yeah.
It makes me wonder though, how are these smart contracts going to handle all these questions you got at the terminal? Because they want to know if you want to round up for this, they want to know if you want to donate to this. Like I'm always hitting no, but what about when I hit yes? No, we don't have to dive into that. But let's jump. Also, obviously, we talked about Aura and juicing, and that, obviously, it is exciting. I hope that once you guys do roll it out in February, that it continues to work more productively this time and continue to flex Algorand speed. But let's talk about Vestige right now. What do you guys have going on over there? Obviously, you have your own other token with Vest, and just tell us a little bit about what's going on there.
So one thing that I want to say: don't say Aura is our other token, because the whole thing is completely decentralized. Totally, and that's a very important part of the project. So it's not Vestige's project. It's it exists now. I made it, but it's not mine. It's not like Vestige's. It just is out there.
It just is.
Yeah. So yeah, for Vest in general, well, we have a very exciting year ahead of us. The first thing that we're focusing right now is on our XGov grant. So essentially, we're doing what we internally call a short-term lending market. It's a similar vein. It's not quite like something like Volksfinance or Aave, but it's also not quite something like GMX or the other one. I forgot. But the thousands of perpetuals platforms that have popped up. We don't call it a perpetual because it's not even like it's doing actual swaps on chain. It's using different components to actually create these price exposure positions, and it's all keeping it all in like in sort of like individual IOU accounts. So it's essentially like you open an account inside this lending market, and you play some collateral, and then based off of that collateral, you can borrow other people's assets that they loan out, and then use those assets to buy a set of other assets to then like essentially have either a long or a short position, dependent on what you do. And based off of that, either gain more collateral as time goes on, or burn through your collateral and eventually get liquidated. Some of the aspects that are really, really cool is that we're forcing liquidation to be done by like the platform instead of being done by anonymous users. We do this by ensuring that like the funds never actually leave the smart contract. So you never actually get deposited USDC like you would in Folk Finance when you take out a loan. So the IOUs and the funds are always on the platform. But by doing that, we can force liquidators to go through the platform instead of being randomers that deposit and then like take the collateral out. And by forcing liquidations to go through the platform, we can make the platform make revenue. Because like what happens right now on something like Folks, for example, I don't know if you guys have followed, there's this person called liquidator.algo. He runs around 80% of liquidations on Algorand right now. And he banks probably anywhere between 500K to, on a good month, to like 250K USD.
Well, we need the TMB liquidator.algo. Here we come.
Yeah. Right. But all that money, you can see him. It leaves the chain immediately. You know, so like he liquidates people, and then that money just leaves the chain. And we were thinking like that's kind of bad, you know, like we don't want that, because that's like we're always struggling with liquidity. So then if we have a mechanism that worked on Ethereum because they had all this liquidity, but like on Algorand it's sapping liquidity from us, then we should try to build things that at least try to generate value and actual revenue for the users that want to have these price exposures to different assets. And that was our XGov proposal. We asked for 350,000 algos. Luckily, we went through, and we went through with 100% funding. And now we're heads down building.
Yeah, I mean, heck, it definitely sounds like that's needed.
Yeah. Hopefully, we're aiming for a slow beta release around this Q. So we're reaching out to community members from like that we know are very seasoned with DeFi, because this is a product that you can't do on testnet, and you can't do it on testnet because you require actual price feeds and actual liquidity pools that have value. And because of that, we do have to do the testing on mainnet. So we're reaching out to people that we know are proficient on DeFi, know what they're doing. They are aware of the risks they're taking, and they are aware that like this could just blow up, so they can do small testings. And then eventually we will do both an insurance fund on the contract and work towards open sourcing it, so that we can be certain that all the actual safety is there. We don't like audits, mainly because we have found in our experience that in an ecosystem like Algorand, auditors don't tend to be proficient enough because they're not builders within the ecosystem to do proper audits. So it's much better to reach out to builders, send them your contract. It's a trust mechanism. You can, of course, sign NDAs or paperwork if you want, and have those builders, like the DevRel team at the Algorand Foundation, like us, for example, we've been reached out by projects before, like D13. Like, so reach out to them and have them read your work in a more peer-reviewed style than auditors, because auditors right now, they're mercenary-ish, and on top of that, they're not builders at the moment. They don't know our stack is different, so they just think like, oh, I'm an EVM auditor, I can audit Algorand.
Yeah,
so,
and tons of audited protocols have been hacked, and exploits have happened even with the badge of security that they give.
Yep.
Yeah.
Yeah, 100%.
Yeah, and I like what y'all doing. Let's talk about it a little bit more after this ad break. So everyone give us about 2 minutes, enjoy these ecosystem ads, and we'll be right back. So welcome back, everyone. Episode 93. We're here sitting with Vestige. So let's get back to that conversation, though. You're talking about auditing. One person I really like who does a great job in the ecosystem is D13. So I want to give D13 a shout out. And you know, he did some audits recently with like the Fame DAO. He helped them out, and I seen him do, you know, with the Coop DAO. There's a lot of things he's working on. So I do like the community auditing aspect that you were talking about. We dive in more about what else y'all got plans in terms of how to make sure your protocols are safe.
Yeah, and actually a big part of security that is being improved ties to having these tools be just better when you're developing, because now it's much easier to audit something that looks like a normal language than it is to audit something that is basically just teal. So developers that are not basically very low level can look at the code and kind of figure out if there's going to be any problems with the logic, even if they don't really know the intricacies of the teal language itself. So it's definitely a big improvement in that area too, where stuff that is written with teal scripts, for example, I can just send it to like 4 different people that I know that have written contracts or just are good developers in general, and they can look at it and tell me if I should either confirm that something is going to be safe, or I should change something.
Yeah, one question I would have just on that topic: how far do you guys think we are, or the crypto industry as a whole is, away from the Web3 security being, I guess, as secure or like people's experience, the general person's experience with Web2 companies and websites and things like that? Because most people go to websites, and I think that's why we still see a lot of people sitting on the sidelines and not wanting to get into DeFi, because it doesn't take much if you Google, hacks in crypto or something like that. A slew of things are going to come up in the millions and millions of dollars. So how far are we from just Web3 being easier to protect, with smart contracts and coding?
I think there's 2 things that happen here. First of all, is that when a hack happens on Web3, it's always obvious. So like there is definitely a survivorship bias in that sense. Because like when a hack happens on sort of like these Web2 closed source platforms, a lot of times you don't even find out. Like the amount of times that you have had identity fraud happen, social security numbers leaked, people's addresses leaked on XYZ, and then you find out 2 or 3 years later, and you only find out because somebody sued the company in some state that you don't even hear about, and the judge eventually asked them to open up. And this is
a little email, sketchy email. Yeah,
exactly.
Yeah.
And
you may have noticed your credit score tanked. This is why.
Exactly. And this is in countries that have robust legal systems. Like once you leave sort of like the so-called West, like Europe and America and parts of Asia, then it's like the Wild West. Like if somebody grabbed your information, you will never find out about it, because finding that is like extremely hard. So that's one aspect of it. And then the second aspect is that on Web3, when you're building platforms, protocols, and architecture in general, everyone's an enemy. So like what I mean is like you don't have you have pseudonymity, you have permissionless, you have lack of vetting, and because of all of that, it becomes a very adversarial space in the sense that you have to think like, where can they hit me from? So like the security precautions that you have to take are just dramatically higher, and because of it, at the moment, all of this tooling is relatively new in the sense that Ethereum, which was like the first smart contract platform, has had, I would say, like workable smart contracts. Like people have been using like these smart contracts to actually do what was intended for years. Because like before Uniswap, in my opinion, most of what you saw in Ethereum was unironically kind of garbage. Like it was just legit. You put here and you get like a picture of a kitty, and that was it. Or you actually have to use this smart contract, but it's calling some backend that you don't know about, that then it's posting the actual transaction and getting. I think Aave and Uniswap, which I think were released in 2019 or 20, I don't remember, were like the first few applications that I was like, okay, there's something here again. Because I remember when I tried to work on Ethereum back when I was at uni in 2016, it was just unusable. Like it was a pipe dream that this would ever be something like interesting or good. So I think it's two-pronged. I think we are getting better at thinking about all the security implications that building a decentralized application implies, but also at the same time, when like the centralized applications fail because they can't cover up their failures, everyone finds out about them.
Yeah.
Yeah.
And it's a headline now because most people use that to, as ammunition of why crypto is, bad and only for illicit, activity.
Yeah,
Exactly.
the whole U.S. Government, that's Janet Yellen and all of them. That's what they only love to talk about. So can we dive a little bit deeper on Vestige? Y'all have a lot of features, right? Can we start talking about some of the features? Let's start with vaults. What are vaults? How do they work? And what's the use case for the vaults?
Yeah, so vaults, and in fact, this could be some a bit alpha. We are actually developing a version 2 at the moment, and it should be coming out pretty soon. So vaults are essentially thought of as two things. One of them is we're a DeFi first platform. We want users to use DeFi. One of the big problems with DeFi is that there's an endless amount of rugs. There's an endless amount of like tokens that are held by insiders or project leaders that you don't know when they can dump them. You don't know like what their vesting schedule looks like. You don't know it. And there's also the problem with liquidity pooling being the most popular type of rug. So what a vault is, it's a decentralized escrow contract that is time locked to a certain timestamp. So you essentially say like, hey, I want to release this 10 years from now in five percentage steps. So every 10 years, I want 20% of this. And you can be sure, because it's like on-chain and auditable on-chain, that the parameters that the user set will be fulfilled, because the user, once the escrow is created, the user has no control of it. And our main use cases has been for projects that just launched, because early on when we launched, everyone called us a rug, especially because the original ticker that we chose, it was either charged or tiny. We ended up going for tiny, and that caused some friction and was the story of the past. But everyone thought that we were a rug. So because everyone thought we were a rug, we're like, okay, well then let's start to build products so that when somebody else tries to start out their business on Algorand, not everyone thinks they're a rug, and at least they can have some indicatives that, hey, this is going to follow set schedule, this is meant to be doing X thing, or like this liquidity is just always going to be here. And how do I do that? Well, I just do a burn bolt, and you can just audit yourself. Like, I will never have access to this liquidity and things like that.
And I feel like we saw the vaults kind of flexed when Coop was launched, right? Because a lot of people wanted to try to, to show the community that, hey, we're in this for the long run. We're not just going to dump Coop on you, even though it ended up dumping. I think that wasn't because the vaults were used. A lot of people locked up. I think it was like 10% of the total supply of Coop had got locked up at one point. But markets are going to do what markets do, and people, when fear enters the market, people sell. It's just what happens. But we did see it flexed, and I do think vaults are a good something that the space needs. How do you guys I guess see it progressing with a lot? Do you guys have some projects that reach out to you that are about to launch that are looking to use the vaults to, I guess, solidify to show the communities that they're not going to rug? Because I feel like what you said is true. Almost any project launches on Algorand right now, and it's a rug. Like everybody just says
almost guaranteed.
One of the core tenets that we have at Vestige is that whenever we build a smart contract platform, we want it to be permissionless. Like, we're very, very strong about it being permissionless. We don't want you, like, as a project, having to reach out to us to launch your own vault. We don't want you, because like we don't believe that you should be doing like we believe that if you have to call support. Like, of course, things break, and like, of course, I'll be there to look at things when they break. But if you have to call us to use our Web3 product, then we're not selling a Web3 product. So that's one of the few things that we really are. We bring a big emphasis on making it permissionless first and foremost. If it's not permissionless, then we might as well not move on with it.
Kevin in the audience said it quite ironic. This is a talking point today because Big Boy just launched, which is, it's kind of funny. Y'all start out as Tiny Chart, which obviously had its issues with, and Big Boy's launching kind of, you could say, the opposite of Tiny Man. And I will say this, the one aspect of your all's platform that I find hilarious is every single time I go to the chat features and see what people are talking about, it is utter nonsense. Like there is nothing constructive I don't think I've ever seen said. And there is one guy, I don't know, I can't think of the name right now, but he is the most profane person I've ever seen in chats, and he's always saying the same message on it's like every single coin that's trading. He's just like, just going to town. And do you have to have Vest? Do you have to spin Vest to chat? Is that the feature?
Yeah.
You have to hold at
Okay.
least one.
Okay.
But other than that, you don't actually spend Vest, because this is a centralized service. Vestige itself is a centralized service, so it's mostly Web 2, and we're using Web 3 sources of data to put that data into a Web 2 essentially product, right? So.
Yeah.
This is a little bit different to something like vaults, is because we support all of that ourselves. This is centralized because it's not crucial to your funds, right? You can always find something else to use when swapping or something. So we don't really even moderate that chat. It's if you wanna talk something in the chat, you can. We have some filters from profanity, and we can't we don't allow links, for example. But that's all we do. It's still in that ethos.
Yeah, no, I like it. I like that
not
it's free reign. It's kind of, like I say, it's funny to see what people come up with and what they'll argue about in a random chart. Like it is funny.
Rug.
Yeah, but
it's crazy.
Hilarious.
There was also one question right above. It says, "What's the value proposition for Vest or Ural's token?" So, what is obviously give the audience a description of Ural's utility for that token.
Yeah. So at the moment, the Vest token is seen mainly as it's very inspired by exchange tokens. So I don't know if you guys have ever used BNB or KuCoin or whatnot. They tend to have features of the more that you hold, the less fees that you pay. So that was like the first initial sort of feature that we had, which is essentially like if you hold X amount of Vest, your fee for our combo gain, which mind you, you're always going to get a better deal when you go to Vest than if you go to a average liquidity pool. Because if you hold no Vest, we're still going to give you 20% of the combo gain that we made for you. And if we didn't make any combo gain, we will not charge you a fee. So like we only charge you if we can get you a better deal. And then that 20% fee gets reduced logarithmically. So like if you buy a little Vest, it reduces a lot, but then it starts like scaling down. So you need to buy more and more and more up until 100% fee. Like you can trade feeless if you really really want, and you are a bit of a degen and you love trading ASAs, then like get a bunch of vests so you don't pay none of those fees and you can just go at it. And then we also add other features inside the website. Things like you can have an ad free experience. You can essentially create so Vest, because it's a centralized server, when you connect into a wallet, your wallet acts a bit as a user profile, but you can connect multiple wallets to it if you will. And because you're creating that wallet connection, some people don't want people to know about that wallet connection. So you can add a privacy feature to it if you hold a little Vest on it, and with that privacy feature, nobody can see like what your profile is connected to as well. You can also have the ability to chat on the site, and you can use you get reduced fees on products that are decentralized. So right now we have Launchpads, and which is an IDO maker, and then the vaults. They can be paid on Vest or Algo, and if you pay on Vest, it's a discount compared to paying on Algo. That's the general use case. There's another one that comes with the upcoming lending platform, but it's super secret, and we can't talk about it right now because it's still under legal review. But we're very, very optimistic about it. So if it comes out, it'll be great.
I do have another question here. How much Vest do I need to hold to view the 1 minute candle?
So this maybe I can answer this question. So the default chart that you can see is the ASA to dollar chart, and because this chart is combined basically from an algo chart and a currency chart, then we only allow to 15-minute views. You can click on the algo currency, and then you will be able to use the 1 minute chart, for free. There's no Vest requirement, but a little bit more alpha on this is that we're also currently working on a new backend system for Vestige, and that would allow us to show these 1 minute charts for USD pairings, because the chart that you're actually seeing on Vestige is dynamically generated from, for example, Vest to Algo, and then Algo to USD. So that's basically what's happening, combining these two charts into the single one to show you that Vest to USD pairing. And currently we just can't do that, to less amounts of time than 15 minutes. But we will be able to in the future.
There's only a few times I've ever traded.
Yeah,
there's only a few times I've ever traded not even traded. I've watched a 1 minute chart, and it was when I was in Pepe. It was running insane. I was trying to obviously I had every triangle going up, chasing that thing as I was trying to time my entry exit point. But if you're trading 1 minute, I don't.
You crazy.
Know what, you gotta have a lot of volatility to be trading a minute. I'll say that.
Yeah.
And also, if you're trading 1 minute, I do recommend using the ASA algo chart, just because that's going to be the largest pull 99% of the time. So that's where you're going to get the views.
Yeah. One question I do have, since we're on the topic still of DeFi, and I've actually, this is the first time, the past 2 or 3 months, this is the first time I've actually kind of went into other ecosystems, in the bear market to actually test out some other DeFi platforms that are new and upcoming on other chains. Mainly, I've looked at some on Base, Optimism, Metis, and even Solana. Obviously, I've played around with Radium and Jupiter and whatnot. How do you guys think Algorand's DeFi, is innovating compared to some of the other chains? Should the hype, is there reason to compare and put Algorand's DeFi above some of these other chains, even though it may not have the liquidity, right? As far as the tech and what you can do, what are your thoughts on just the overall ecosystems?
I think the question is kind of, I don't know if there's the right answer to this, because the innovation on other chains is just trying to make what Algorand already has to work just as good, because we have way better aggregation, we have way better finality of swaps, we have much faster finality of swaps. The DeFi experience really works already. So what we can actually innovate with the Algorand DeFi is to just create new products that don't exist on other chains, because everything else is every other chain is just playing catch up. They might not even know this, but they are just trying to make possible what already has been possible for months on Algorand.
So I feel like then to piggyback off that question is, what could be built on Algorand that's not here already? What in DeFi do you guys see? And maybe you have it on your roadmap that you're all looking to build for 2024, but what could we build on Algorand, that would attract
a new lending market, which we're already building.
Yeah.
And no, but in general, I do feel like right now we had our Me Too phase. So essentially, we grabbed that what other chains were doing, and we were like, "Oh, I can do this too." So we copied a Uniswap style swapping feature. We copied an Aave style lending market. We copied a GMX style perpetuals. So we've done all of that, but now is kind of the point where we go, "Hey, we can do things differently," and in so doing them differently, we can actually see if there are things that we can do that no one else can. And I think right now, 1 year in from a revamp on the developer stack tool, and also 1 year in from essentially expanding the amount of on-chain storage that we had with boxes, expanding the amount of calls that we could make with composable smart contracts, and expanding the amount of opcodes that we have on the Teal stack. Now that we have all of these different tools that have been more informed by builders on the ecosystem and not just by Algorand Inc. Algorand Technologies kind of going "Oh, I think you guys need this," and just building stuff, thinking. Now it's a more retroactive conversation where we kind of tell them "Hey, we would like this to be easier. We would like this to work differently. We need this to build our solution, etc." I think now, this year, especially with a little bit of hype, we're going to start seeing more and more cool things come to mainnet.
Yeah, I'm excited.
And I think we'll see things that that are DeFi, but they're not the DeFi that happens on Solana, and they're not the DeFi that happens on Ethereum.
Yeah, and I'm still waiting for like a killer like mobile app for DeFi to be built on Algorand. Like that's the one thing I think still that could. I mean, because most people, if they get into trading, right, if they're dipping their toes, I would say most people in America, at least, they're downloading like a Robinhood app, right? Something that seems super simple. The user experience from start to finish, they literally connect right to your bank account. It makes everything so seamless that like you could be trading stocks in in 5 minutes and you get a free $200 or $100 bonus for trading or something, a promotion. And I feel like that's where, I see the exciting things that are getting built here, there, and everywhere, but like it still feels so degen, right? And like the bar is still set really high for I feel like the average crypto newbie or average trader to want to really get in and do it.
I think that's why I'm cautiously optimistic about those sort of legacy Algorand like partnerships that are happening. Like there was that what was it called? No, it's not a Web3. It's a digital bank in Latin America. I forgot its name. That's trying to build a significant amount of its infrastructure. No, Coinbanks is helping them. They're advising them, but then I think it was. I don't want to say new bank because
it's a Banco. Like the Banco.
No. That's
They're based in Argentina and they're launching in Mexico pretty soon. And
I know which one you're talking about. Yeah, I don't actually think of the name.
They're building a significant part of their infrastructure in Algorand, and I'm actually excited about that because they're probably the closest that can bring an experience like that, where you will have essentially custody still within a legacy institution, but you will have the plugins for self-custody should the user ever decide to move on or go into more proficient or more like experienced use cases. So like in my head, eventually companies like this might end up using DeFi, not because they want to degen, because it might be their easiest access for liquidity. Why would you let's say that you offer an account in different currencies like USD and Argentinian pesos. Why would you route through a forex market that's taking so many in fees when you have available this amount of liquidity and you can give your user a better yield, or even just give the user the yield that he would have gotten and pocket the difference and have that be your margin? So like I think that might happen.
Financial systems are just complicated. It's like it's very difficult to create a network of databases essentially where you can just store financial data for people that doesn't just get hacked or abused immediately, right? And with blockchains of this scale, you can be pretty much sure that it's not going to break. So you're just paying those minuscule fees for these transfers, and you have the guarantee of pretty much top of the tier security.
Yeah. And it's only on high performance chains where like these type of things are happening. Like think of something like a point system. A big company like Walmart could develop their own point system. They have their own servers, they have their own databases, they can do all of that. That's not a problem. The problem is when a smaller shop wants to offer rewards. Are they really going to like want to build all of that infrastructure? No, that's bonkers. Like then that's when things like blockchain and high performance chains like Algorand kind of start making a lot of sense, because suddenly you have like this idea of like, hey, I could use this thing that I don't have to maintain, and I don't have to maintain because it's fully decentralized, and I can kind of use it as my solution for my point system, for my reward system, for whatever. And I could have this hybrid centralized, decentralized service that will be a fraction of a cost to maintain than having this huge thing just on my own personal database, or at least I see it that way.
And I'm sure, I mean,
Web
heck, that's
2.5.
Yeah, that's what so many people are that's what we're all speculating on, right? If you're buying a crypto asset or a token that is the fee of a network, you're hoping one of these giant companies in the world says, hey, I like the tech of Algorand, I like the tech of Solana, I'm going to build my business, my reward system or whatever it is on that. I mean, we saw that even in last year with, Starbucks and Nike and all these big companies, Disney, starting to choose Polygon, and a lot of people were chasing that hype because it's true. When you already have those massive user bases and you can build a simple, reward structure using a blockchain for your customers, I mean, boom, that's an easy solution.
Yeah, and even with big companies, I think there's a big potential for them to switch. I I believe that most companies that even tried to look into the crypto space, tried something like Ethereum, tried something like Solana, like Polygon, and then you try to develop an MVP and you just get covered in problems just straight off the bat, right? Which would most likely not exist on something like Algorand, but they never get to that part. They never, go to their fourth different network. They just say, crypto doesn't work, and that's
Yeah.
it.
Yeah. Ethereum
And-
always gives people that problem. I couldn't imagine doing anything we talked about on Ethereum.
No,
Yeah,
it'd be very expensive.
Oh my gosh.
Yeah.
Well, we've even had so many issues. Heck, I've even had, obviously I do, obviously it's cheaper on Base and Optimism and some of these layer twos to trade and actually do some DeFi things. But, last bull run, last bear market, like if you had anything on Ethereum and you were trying to swap, it was going to cost you an arm and a leg. It just would made it
2 weeks ago,
not feasible.
when
it was running up high. There's also another question I'd be interested to get your all's thoughts on, since we're, talking about Algorand and obviously its future as well as what Vestige is doing. You guys, said that you did a proposal and it was approved, obviously 100% success in the XGov. We had Stacy on last week talking about the whole XGov and even bringing to light John's tweet saying, some of the changes that he would like to see. What are your all's thoughts with, how Algorand governance has grown, and do you think it needs a kind of a revamp again, or do you think it's it's going to be something that can continue to grow the way it's growing and be successful?
I personally, and I'd say that as a member of the DeFi committee, I think it needs a huge revolution. I don't think it's reformable. I think it needs a whole revamp. Recently, I also read the Thoughts from a Pond blog post. I have mixed opinions about it, but in general, the idea of it needing a full 180 change of what governance is, of like who should we pay on what yield, and like who should we give tokens to and for what, I 100% agree. I think most of the programs have been too expensive and they have had a few, like very little return on investment, and also have kind of created this mentality of just passiveness, like a very little activity on chain. And I think that then kind of creates this stagnation, this idea of like, we're all like, personally, I can talk about like the selfish side of me that is like, oh, I'm getting tokens for free. But then when you look at the whole picture, you go a bit like, I'm just getting diluted. Like, let's be honest, I'm just getting diluted, and I have to like basically go through all of this just like to avoid my dilution. And that part is a bit sad because I think it could be way, way more than that. I think I really like retroactive grants. So I really, really like retroactive grants. I think they work well. And I also think that we do need to have a community voting tool to give funding for future things, even if the community gets scammed. I do think that that's so like an XGov like platform. I do think it's also needed.
Oh, so needed.
And I don't think governance should pay you at all. I think like governance should just be like bye, and node operators should get.
Do you think there should be an extra, like an different token for governance? Like, a lot of platforms have a governance specific token that's not the token that pays the fees of the network.
I speak from a bit of like an elitist point of view because I am a dev and I would be able to do this. But I do think that if you run an online node and you have a stake on that online node, and then you keep a minimum amount of stake on that online node, that should give you the voice to vote. But I understand that this could be very, very limiting. Like, and I have a hard time sort of like conciliating those 2 points of view, because I do want the individual user that isn't from a dev background to voice their concerns and to have a place where they can vote for things, or like at least guide where they think the change should go. And I hope we could develop secondary services like that, where you could pull, for example, and passively pull, and maybe that pull becomes like a type of G-algo or M-algo type of instrument that I can just hold, and then I can vote through that platform, and then at least I don't have to run the infrastructure. But I do feel that for proper governance to work, there needs to be effort from the individual. And right now that doesn't exist. I mean, clicking 2 buttons once every 4 months is not enough effort for guiding the chain, in my opinion.
Yeah. And
I'll add too, like, just even the XGovs, back to that with the GitHub, like we put in a proposal, that whole experience was really rough. We're not developers, but I'm really I'm an editor, tech savvy person, so we know how to use the internet well. GitHub was trouble, and then to go to the forum and not realize, not knowing,
I mean,
what are we
our
doing in the
proposal
forum versus GitHub.
Yeah, this is our first time obviously putting one through, and to an extent it's like, ours is obviously maybe not getting as much attention as maybe some of the others are. We don't know if that's good, that's bad. Like there's just not really a good way for someone new coming in to be able to know, hey, like how does this whole process actually go smoothly and make sure that the money is going where it needs to go. And it's interesting, you talked about the retro, grants and things. That's what I'm like I said, I've been watching the Optimistic Network or Optimism, and that's how they do their grant program. But I saw, I follow a guy, Alexander Wagme, I think is his Twitter name, but he pointed out a lot of, flaws that he saw within their past epoch, or whatever you want to call it, with their grants being sent out, where a lot of the people who got massive amounts of OP, I'm talking like hundreds of thousands of dollars of OP, were people doing more off-chain goods, meaning they may have just thrown a party, right? Had an event that hosted developers, and they just made almost $150,000. Like,
damn.
And then you had some of the largest dexes, which would be Velodrome for OP and Aerodrome for base, that got 0.33, of that total grant, that whole pie, right? And so you're really like, it's not just like, it could still be gamed, and that's why I think we do need to, obviously, I'm biased, I would like to see our proposal get approved and us get the funding that we were looking for in this period, but I do see the issue that governance, it's not working. Like no one, like, yes, there are people who participate in it, but it's because they're getting paid and they probably have a crap ton of algo and they know they're about to make a lot of money. Whereas like, and the work they're having to do, like you said, clicking a few buttons in a governance period, it's not enough work, and it's too slow of a process to actually get anything done. And if we want to see that change,
and the votes are bad. It's just the same vote every.
It's
every
the same
4
thing.
months.
It's
DeFi,
do we want to
NFT
renew this
rewards,
program?
more or less. So
and those,
I think it's clear that almost everyone is a bit disappointed with the rollout of governance, and I thankfully will like to think from conversations with the foundation and members inside the foundation, I know that this is something that they're very aware of, and I know that part of the overarching narrative of the Algorand Gambit has been a rethought of these core issues that they recognize that are wrong right now with our current chain.
But I definitely think if they don't change things and do a full 180 at least at the end of the next period, like they better do the change before all the rewards go to incentivizing nodes. Because if you think the XGov platform and people actually caring about it is bad now, wait till there's no money being paid to the people, because at that point it just seems like it'd be a ghost town over there. And so I would be in agreement there.
So let's slowly start to close out. Is there any other information that y'all would like to share with the audience before we go?
I think we kind of covered everything. Greg is still building Tame Quest, which is a really cool game. It's like online. It's an on-chain battle simulator. So development on that is still happening, and there was an MVP that was really cool. He gets very nervous when I talk good about his project. So
like I know that I'm in a lot of different things, that I'm building a lot of different things, but all those things are still being built. So I've not abandoned anything so far. Even recently in our Discord, if you're not in the Vestige Discord, by the way, I invite you to join, because we're active like pretty much every day. We are here, and we're still building here every day. So if you want to talk with us, join the Vestige Discord. But there, I recently just posted some screenshots of the models that Temcost is going to be using. So I'm actually I already hired a developer that is rebuilding the game in a 3D space. So hopefully this becomes an actual, not AAA obviously, but maybe a single A or something game.
Yeah. Hey, well,
I like battle
anything,
simulation
yeah,
strategies. So
anything building on Algorand right now, especially coming in 2024, is bullish in my opinion. Because, like I say, this is the year. Like Algorand, I think it has the tools to shine. I think the changes that are coming down the pipeline are going to help it flex a lot of those changes in a new light. And I'm excited for the builders that are here, because I think everybody who's weathered this, the past 2 years is going to be, rewarded for all the work that's been put in. That's for sure.
definitely.
We're still going to be here building. We love this chain, and we want to see it be successful.
Yeah, same here.
Excellent. Well, thank you, Team Vestige. Episode 93, y'all. We are about to close out, and we will see you next week.
See you, everybody.
Thanks.